People who are rich acquire assets. The poor and middle class, on the other hand, do not become rich because they acquire liabilities that they mistake for assets. They fail to buy income-generating assets because, first and foremost, they don't know how to differentiate assets from liabilities. Hello everyone, and welcome back to the Finance Guardian channel. So, what exactly is the difference between assets and liabilities? According to Rich Dad, an asset or a liability at a specific time is determined by the direction of cash flow. It is an asset if it puts money in your pocket. So sometimes we think our possessions as assets, but do you take a moment to really look at those assets and see if they are bringing you money or if they are draining you of it? Quite the contrary, a liability is something that takes money from your pocket. Credit cards come to mind when we think of liabilities. Every time you make a payment, you are taking money out of your pocket. If you make a mortgage payment, that's your liability at the time because it requires money from you until you own it and it becomes an asset. Consider all of the different expenses that you pay for that take money out of your pocket. Those are liabilities. Now the question is, how do you convert a liability into an asset? Watch this video to the end to find out. Financial intelligence. Among Rich Dad's definitions of financial intelligence was, quote, the ability to convert cash or labor into assets that provide cash flow. However, one of his favorite sayings was, who is smarter, you or your money? For Rich Dad, spending your life working hard to earn money and seeing it disappear at the same pace as it comes in is not an indication of great intelligence. Always keep in mind that rich people focus their efforts on acquiring assets, not on working harder. A lot of educated people are exposed to high financial risks because of their lack of financial intelligence. The Rich Dad referred to it as the financial red line, meaning that income and expenses are roughly the same every month. People like these are clinging to their jobs desperately, are unable to change when the economy changes, and often destroy their health by worrying and stressing. These are often the same people who assert that business and investing are risky. Robert Kiyosaki believes that business and investing are not risky, but being undereducated is. To be misinformed is risky as well, and relying on a safe, secure job is the greatest risk one can face. Buying an asset is not risky at all. What is risky is buying liabilities that you have been told are assets. So, how do you convert liabilities to assets? Controlling cash flow requires a high level of financial intelligence. If you turn that car into a taxi, it generates cash for you every day, putting money into your pocket. The car is no longer a liability since it is now a source of income as opposed to when it was merely a drain on your finances. Here are some ways to turn your liabilities into assets. Number 1. Steer clear of wasteful people. The people around us can either be assets or liabilities. As an example, if you end up spending money every time they're with you without getting anything in return, these people become liabilities. You can also weaken your cash flow and become broke by taking bad advice from people around, from a financial planner, or from a greedy and self-centered person. It is best to disassociate yourself from such people since being around them will cause you to spend more. Then you can save the funds you would have spent on them. The money you can save can be used to buy shares, make a blog or a podcast, or buy a car for a taxi. Now you have just turned a liability into an asset. Number 2, turn that car into a taxi. Your car can only be an asset if it generates income for you. As long as you spend money on the car without getting anything in return, then it's a liability. Transform the car into a taxi to generate extra income. If you have a paid job, you can use the car to provide taxi services during weekends and after work. If you want, you could even give it to someone who will work for you and pay you daily, weekly, or monthly, depending on the agreement. Number 3, take loans only to expand your business. Taking out a loan is often viewed as an indication of not living within one's means. It is true that a loan is a liability, but if you take it for the right reason, it can be turned into an asset in a short period of time. Getting a loan is okay for expanding your existing business or funding a new business because you can repay the loan with the revenue generated by the business. But don't take loans for items that will not bring you profit. These include weddings, birthdays, anniversaries, and others. Number 4, rent out unused rooms in your house. Putting up some empty rooms in the house you built or purchased for rent can generate steady income that can be used to take care of your personal needs, to maintain the house, and in the long run, to invest in other things that can bring greater returns. The assertion that your house is not an asset by Robert Kiyosaki in Rich Dad Poor Dad generated a lot of controversy. It has been reported that he has received more angry mail about that issue than any other in his books. In Kiyosaki's words, quote, "When your banker says your house is an asset, they are not lying to you. They are just not saying whose asset it really is. Your house is their asset. When you examine a bank statement, it becomes clear who really owns your house, and it's the bank. The majority of people do not own a home. Instead, they own mortgages. People who are financially literate understand that mortgages do not appear in the asset column on a financial statement. They are listed as liabilities. But it does appear on your banker's balance sheet as an asset as you pay interest to the bank every month. The definition of an asset that Rich Dad taught us was, quote, anything that puts money in your pocket. A liability is anything that takes money out of your pocket. I mentioned earlier that if you look at your bank statement every month, you'll see that your home doesn't put any money in your pocket and takes a lot out. Even if your home is paid off, this is still true. Even after you pay off your mortgage, maintenance costs, taxes, and utilities still need to be paid every month. And if you don't pay your property taxes, guess what'll happen? It is possible for the government to take your home. So, who truly owns your home? This isn't to say that you shouldn't buy a house. Kiyosaki's goal is simply to make you see that it is not an asset. This is your home, and you should enjoy it as such, not as a ticket to a secure retirement. You can find that elsewhere. The truth sets people free, and knowing that your home is not an asset but rather a liability is one of the most important truths you can know. How Robert Kiyosaki's ex-wife turned a sailboat into an asset. As soon as Kim, Kiyosaki's ex-wife, decided she wanted a sailboat, she began looking for ways to acquire it and turn it into an asset. Instead of keeping it at a dock in Hawaii and writing checks every month to pay for maintenance and the loan on it, they placed it in a charter company. When they are not using the boat, it is chartered throughout the Hawaiian Islands. The income from the charter business pays for the boat's expenses. The same thing happens with their Hawaiian vacation house. The house is beautiful, but since they used to live in Arizona, they don't spend much time there. For this reason, they rent out the house for thousands of dollars a day for most of the year. The cash flow easily covers the expenses of the house and then some. Once again, they manage to combine assets and liabilities. And the most awesome thing is that they get to enjoy their boat and turn their house whenever they want, paying for them with the businesses they turned them into. And that is all the time that we have today, folks. We hope you enjoyed this video, and if you did, please do remember to hit that like button. And if you're new around here, subscribe to our channel, and on your way out, please do remember to click on that bell icon too so you can remain updated about all of our future videos. You're welcome to the channel where you will learn the basics of personal finance in easy to understand language. We'll see you next time.